Picking explosive growth stocks can be extremely challenging, but it could also be extremely rewarding if it does work out, because all you need is one of those stocks to work out and for this stock to go up 10 times, 15 times, 20 times, and to give you life-changing gains. But the beautiful part about investing in stocks in general is if you do the right position sizing, if you're right, your upside is unlimited. You could make unlimited amounts of money. But if you're wrong, you don't lose too much. And in this video, I'm going to give you a lot of secrets, a lot of things that I used throughout my investment career that I implemented to be early on many different trends, such as the plant-based trend, such as stocks like HIMS, which is up 700% for me, such as Robinhood. Robinhood is up 3x in 3 months for me since I bought it in April. One of the best gainers I've ever had. It's been amazing. And many different stocks that I picked throughout the years. It's a very different framework, a very different way of understanding how the cycle works. It's not just about PE ratios and if the stock is expensive or undervalued. Anyone can look at that stuff. But identifying an explosive stock, identifying a potential bull market leader, it's much more than looking at a PE ratio and determining if the stock is cheap or expensive. Not just any stock is going to move like Robinhood, or is going to move like HIMS, or is going to move like Palantir, or is going to move like many of the stocks that you've seen throughout the years. There's many growth stocks in the market that they pretty much never move, or they do move, but not an explosive move like what I'm about to talk about in this video. It's a very special set of characteristics that I'm going to explain, and I could even write a book about this one because it's not something that I see a lot on YouTube and I see a lot on many different content kind of channels. So I'm going to talk about it today. It's all free on YouTube. So all I'm asking from you is please press the like button, watch the entire video because the secret sauce is at the end as always. So please watch it, press the like button, and let me know what you think in the comments. Okay, now before I get started in explaining the attribute on what makes a stock a bull market leader or what makes it a explosive stock and what I look for, I have to explain to you the cycle and how the cycle works, because this is very, very important. Now, normally in the market, we have a 2 to 4 year cycle, and it's always the same exact cycle. It's never this time is different. It's always the same exact cycle. And I know that because I've capitalized on it many different times. From 2018 to right now in 2025, we've had 4 different cycles through 4 different teams. Now, the cycle starts with optimism around a certain theme, a certain narrative. And this is a narrative that's actually valid. Like this is something that's disruptive, something around tech, something that gets retail investors extremely, extremely excited. And it's a very valid narrative. For example, from 2020 to 2022, it was mainly electric vehicles, things like Tesla, NIO, all these kind of stocks, things around climate change, and things around plant-based food, which what I participated in. I had a stock called Else Nutrition. I made 400% in 8 months with the stock. It's one of my best gainers back then. So it was also the plant-based food kind of narrative back then. That lasted up until the 2022 crash. After the 2022 crash, a new theme has emerged, which has been AI. And AI lasted until April of 2025. And in April, I made a video on YouTube. You can go back and look it up with the same exact chart. And I told you guys back then, once the April pullback is over, we're going to have a new trend. We're going to have a new theme. And the leaders of this next bull markets are highly unlikely to be the same leaders of the previous bull market. It doesn't mean that NVIDIA is not going to do well. It doesn't mean that Palantir is not going to do well. But there will be emerging winners in a different theme than the previous one, because after pretty much every pullback, you have a new trend that emerges. You have optimism around a new theme, a new trend. And if you can identify this trend and pick the right winner, the right stock in this trend, you can make life-changing returns, like I've done with telehealth, with HIMS, like I've done with Robinhood, which is up 3x in 3 months. I mean, you can't make it up. I've done it many times. And I told you guys back in April, you can go back and look it up. I told you this trend is going to be in space. It's going to be in automation, a lot of things in robotics and automation, which still hasn't played out, and it will play out in the future, I believe. As we have factories coming back to the US, automation is going to be big, and robotics. And I told you it's going to be fintech. I was extremely right. Look at AST Space Mobile, Rocket Lab. The space stocks are taking off like never before. And AI is doing well, but not as good as the space stocks because we have a new trend around a new theme that has emerged from the pullback. So as long as you understand the cycle, you know what to look at, which is different from what you looked at before. So during a pullback, the worst thing that you could do if you're trying to find a growth stock is look for an AI stock. So if the AI stocks was the winner, the worst thing you could do is look for an AI stock in a pullback. It doesn't mean it's not going to go up or do well. Everything will go back up in a recovery. But if you're trying to look for a new bull market leader, you have to look for a team that's different from the previous team. And that's what I did with Robinhood. And that's what I did with many different investments that I've had before. This is important. I'm going to give you some characteristics that make a leader or a bull market leader in a new team. Now, this team has to have a large TAM. So a total addressable market has to be large. So Robinhood, for example, had a large TAM in fintech. Fintech is huge. Disruption in the financial sector and sports betting and banking. This is huge. Space is a $1 trillion plus TAM, massive TAM space exploration. If you think about automation, which has yet to play out, and I'm doing a lot of research, a lot of factories are coming back to the US. Labor is expensive. Automation is coming, guys. And whoever plays in automation, not just in software like NVIDIA, but in hardware, that's going to be insane, massive growth over there. As there are going to be some amazing winners, which I'm looking at. So this is a large TAM. So you need a large total addressable market. That's an obvious one. And I'm sure you know it. Okay? The second thing you have to try to look for an industry leader. So sometimes in the market, we get tempted to buy the second best just because it's cheaper. So many people did not buy Robinhood. They bought, for example, another fintech stock because it's cheaper than Robinhood. Okay, we get tempted to do that stuff. And sometimes it works. Like if you bought, let's say, AMD instead of NVIDIA, you didn't do as well, but you still made money over the last 5 years with a company like AMD. If you bought Lowe's instead of Home Depot, you still did well. If you bought MasterCard instead of Visa, you still did well. So it's not really a bad thing to do in practice, but whenever you're looking for the explosive growth stock, you have to look for the leader of this industry, even if you have to pay up for it. You just pay up. If it's even double the multiple, don't buy the second best because it's cheaper. It's cheaper for a reason. Pay up about double multiple and buy the industry leader. This is something that's hard to do. It's mentally tough because we want to believe we're getting a bargain, but you're not getting a bargain. Everyone's looking at Sam. So it's best to buy the leader. That's hard to do, but it's something that you have to do if you're trying to look for them. Okay? Now, the third thing you have to look for is under 10 times sales. Now, that's a hard one to stomach, even for me, because before that, I was looking under 5 times sales and 3 times sales. But over the years, the market has been getting more and more expensive. And those growth stocks have been getting bid up so much that I've been having a hard time finding them under 5 times sales. Like HIMS, I found it at 2.8 times, and it was growing sales 40 or 45%. It was a good find. You don't find them very often. But most of the time, under 10 times sales, it's not a bargain, but it's not too bad. I would prefer under 5 times, but if you're paying over 10 times sales in most cases, you're generally getting ripped off. In most cases, not all the time, but in most of the time, you're generally getting ripped off. Okay? Something else you have to look at is revenue growth, of course, at least 20% revenue growth. If it's 5% revenue growth and they're paying a dividend, it's not a growth company. Avoid it. I'm sure you know that. Very basic, so I'm not gonna talk about it again. Something else that you have to look at is you cannot buy growth at any price. This is something that I'm against. And you have to look at a company that's profitable or within 1 year of profitability. So if you look at the estimate, it has to be expected to be profitable within a year and a half maximum. If it's more than that, then don't buy the stock because you will likely get diluted to the stratosphere, and it's really bad. For example, Archer Aviation is a company that's very disruptive. They're working on, they call them flying taxis or like some kind of electric planes or whatever, which I believe they will be the future, as they will facilitate transportation within New York City. They're already rolling them out in Dubai to help with traffic. Tunnels are not going to cut it. Trains are not going to cut it. The metro is not doing too well. Those flying taxis, I believe they will likely be the future once they perfect them. Okay. And they have $1 billion order from United Airlines. So they have some backing. But the company is not going to be profitable before like 2029, 2030. Okay. Now they have some cash, but I don't want to bet on 2030 profitability. I'm not such a visionary. I'm still some kind of a value investor at heart. I can't do that stuff. To me, that's too speculative. So that's why, even though it's going to grow and it's amazing, to me, it's like I'm throwing darts at a board. Like it's like a lottery ticket. So to me, I wouldn't really bet on Archer Aviation, even though it has a lot of growth, but you can't just buy growth at any price. This is very important, and it has to be profitable or within 1 year of earnings per share profitability to try to minimize dilution as much as possible. Now, the last one, which is going to be something that maybe you never heard before, and that's going to be a important one, which I'm going to explain in details, and it's a special one, and I never talked about this, and it's not in the Intelligent Investor book, and maybe Benjamin Graham is going to kill me right now if he was here, because that's not like something that value investors are open to, or most investors in general. But this is something that's called relative strength. Relative strength is something that I learned years ago, and maybe I'm going to talk about this someday. But a few years back, I had the honor to work with someone that has worked at a very popular hedge funds for many decades, and he taught me something I'll never forget. And he told me the next time we have a stock market crash, you go out and you buy the stocks that are down the least. And I looked at him, I'm like, what are you talking about? Like, I was shocked. Like, most of us as retail investors, we tend to want to buy the stocks that are down the most. Like, I'm sure you understand what I'm saying. Like, if you have the stock market going down, right? You have a stock that's down 5% from its high. Let's say it's down 5% on the year. Another stock is down 50% in a market crash. You feel better if you're buying a stock that's down 50% versus a stock that's only down 5% because you feel like you're getting a bargain. I'm sure you understand what I'm saying. You feel like you're getting a discount. You feel like you're getting something. It's just satisfying to buy the stocks that are down the most. But this person that has decades of experience is telling me to buy the stocks that are down the least. Why? Because of relative strength. Relative strength is mainly demand. So the stocks that are down 50, 60, 70, 80%, they're down that much because no one really wants them. They're down that much for a reason. It doesn't mean the market cannot be inefficient and they're not making a mistake selling those stocks. But most of the time, they're being down 50, 60, 70% for a very good reason. But during a bear market, during a stock market crash, if you have stocks that have demand where institutional investors are buying them and the stock isn't going down as much as relative stocks in a sector or in a specific category of other growth stocks, that means there's demand for those shares and those institutional investors are buying the stock for a reason, which means it's like a spring that's waiting to explode once the market goes back up. And this is kind of how you could potentially identify a bull market leader. And if you look back at Robinhood, as just an example, I'm giving you other examples. This is Robinhood. Robinhood at the start of the year, until pretty much the trough of the pullback in April, it was a brutal one for the growth stocks. Stocks like SoFi was down 55 or 60%. Other growth stocks were down at least 40, 50, 60%. They got killed. So Robinhood, it was only down 12.5%. 12.5%, that's it. That's why no one bought Robinhood. When I was buying Robinhood, people told me, why would we buy Robinhood? It's only down 10%. Other stocks are down 50, 60, 70, 80%. Robinhood's only down 10%. If you also noticed in the pullback, Palantir wasn't going down as much. And people were wondering, why is Palantir still trading at $80? Why is Palantir not going down so much? Because there's demand for those shares. And the reason why there's demand in such a pullback, they're not selling them, they're buying them, is for a reason, which we'll find out later. This is what happened with Robinhood. This is what happened with Rocket Lab. Rocket Lab was also holding up a little bit better. We see how Rocket Lab has kind of emerged. And we saw what happened with Palantir. We saw what happened with many different stocks. So the biggest misconception that people have is that you have to be early. Like you have to close your eyes and try to imagine what's going to be the next trend, and you have to be the first person to buy it. Like you have to buy it at the bottom. This is not true. I am not someone that's a visionary person. I told you guys, I started buying stocks below liquidation value. And later on, I got into the growth stocks. So for me, I don't have the vision to look at Robinhood at $8 and buy it. I did not have this vision. Other people on YouTube had the vision. I didn't have the vision. I skipped it at $8. I skipped the stock. I wanted Robinhood to prove itself to me. Robinhood has proved itself to me over the years. Every year, you have a sell-off due to something stupid that has nothing to do with the company. This year, it's the tariffs. Last year, it was the carry trade of the Japanese yen. In 2023, if you remember, it was SVB, Silicon Valley Bank. In 2022, it was something about the Fed raising interest rates. In 2020, we had COVID. In 2018, 2019, we had something with reverse repo. Apple went to 14 times earnings. Look it up, 14 times earnings. So every year you have a sell-off. And once you have this sell-off, you have to look at the chart. Look at the chart of the emotions. Look at what was the dominant team. What's the dominant team? You avoid this team. And you look at what could be the next team, and you look for relative strength among those stocks, and you look for earnings growth, you look for what I told you about in terms of a large TAM and everything, and you find the right setup, and you buy the stock. You don't have to be the first one to buy it. So I did not buy it at $10, I bought it at $30, and I made 200% in 3 months. I know it sounds easier said than done, and I can't show you everything in one video, but I'm giving you practical things to look for you to be able to identify those setups, for you to be able to identify those stocks, and it takes years and years. I didn't just watch a video and then I buy Robinhood. That took years and years of me missing on opportunities, selling them too early, not doing them because I'm too late. And the thing is, you have to do your research ahead of time. Robinhood, I did my research 5 or 6 months before I got the chance to buy the stock. So many of you guys, you look at Robinhood, you're like, oh, I'm going to do my research. So you do 2 weeks of research, the stock's already up 50%. This is not the 1920s anymore. You have to do the research first. You put it on your watch list. The stock goes down to your buy price. I got alerted Monday. It was like 9:34 a.m. and I executed. I bought Robinhood. This is how you have to do it. So if you look at this chart, I'm not trying to time the market, but July is historically a bullish month. So if we're looking at odds, we're likely going to have a sell-off, September to October. So if I was you, I would be looking at stocks right now. Maybe the space stocks, maybe automation stocks, maybe stocks that you believe have some kind of a play in the next team within automation, which I believe is huge, robotics and other kind of things, even within space, other than AST Space Mobile and Rocket Lab. There's many different things which I'm personally looking into. And you look at them, you have to do the research now. Once your buy alert triggers on your fair value number, then you buy the stock. But you have to do the research now. You can't do the research when the stock is going down. And if you want me to do the research for you, you want to participate with me on such opportunities into the future, this is the link. I share everything in real time, and I show you all my videos on how I do it, and you could talk to me, ask me anything 24/7. I'm there all the time. But if you also want to learn how to value those stocks, I have a video. It's called The Biggest Mistake Value Investors Make. And I teach you how to value growth stocks. So this is the best I could share with you guys on YouTube. I don't want to make it a 2-hour-long video. And I hope you found it helpful. Maybe it's easier said than done, I know. But maybe you watch it a few times. You try to put it into practice in the next 6 months to a year, 2 years. It's not something you could do tomorrow. And, you can understand if you watch the market, you watch how those stocks behave, you watch certain characteristics, you watch certain things, certain pattern, how common what I'm talking about happens, then you'll understand what I'm saying. So I hope you found it helpful, not financial advice. Hope you enjoyed it. Please press the like button. Hope you enjoyed it. Consider subscribing. Talk to you in another video.